Hello, everybody, and welcome back to another episode of Adam Bergman's Moneymakers, where we talk everything traditional personal finance and as it relates to your own personal journey in creating generational wealth for not only yourself, but your family. Because at the end of the day, that's the entire reason for living, and that's the entire reason for working, to make sure that your little cubs grow up successful and remember you when you're long not here. So, what the heck is going on? The last 3 days were absolutely brutal with the stock market. And earlier today, the blood did not stop. And all of a sudden, everything is green. Everything is green. Literally, there's nothing red. Everything is green, and it's all rainbows and flowers. What happened? Well, we had something called a GDP print, and they're basically saying that our economy slowed down, GDP slowed down by 1.4% in the first quarter of this year, which was the first slowdown since April of 2020. So for 2 years, we had accelerated growth, and this is the first slowdown or negative growth for the last 2 years. What exactly is a recession? What is this fear of recession? 2 quarters in a row of negative growth. That's considered a recession. Now, it can be 1.4% and then another 0.1%, and that's still a recession. Or it could be 1.4% we had first quarter, and then we have another 3%, for example. This all considered a recession. So there's a huge difference between a big recession, a large recession, or a small recession. But essentially, a recession is 2 negative growth quarters of GDP. GDP stands for gross domestic product. It's essentially how much money is coming into the United States. How quickly is the United States growing? How much is coming in as opposed to coming out? So, what the heck happened exactly? There's a couple of fears here and a couple of fears that subsided. So the fear was that all stay-at-home stocks or tech stocks or growth stocks were going to tank. Why? Netflix had a terrible, terrible earnings. And then 2 days ago, Microsoft had a really good earnings and Google had a okay earnings. They barely missed. It was not terrible, to be honest with you, but it still wasn't the greatest earnings. Today, Facebook came out with earnings, and the fear was that Facebook was going to absolutely tank. However, Facebook did not tank. But who did tank is Teladoc. And I think there's starting to be a little separation between stay-at-home stocks and tech stocks. They're not the same thing. So Teladoc, Zoom, those were stay-at-home stocks. Netflix, also stay-at-home stock. Roku, stay-at-home stock. Problem is, nobody's staying at home. Everybody can't wait to run back to the office. Why? People are tired sitting on their behind at home, and they want to leave. They hate seeing your face, right? Your spouse hates to see your face. Your kids want you to leave home. You want to leave your kids. Like, at the end of the day, you need your space, right? You guys understand what I'm trying to say. I don't mean it in a bad way, but everybody needs their space. So stay-at-home stocks are exactly that. Stay at home when we have to. However, when everything opens up, everyone goes back to work. This is kind of what happened with NVIDIA, where people are like, oh, it's going to be a slowdown for chips. I don't think it's going to be a slowdown for chips. I actually think it's going to be an increase demand for chips, because now a lot of corporate offices that were not upgrading for the last 2 years will now upgrade because they never thought that people were going to go back to work. So growth stocks are good. Stay-at-home stocks are bad. So Facebook is up nearly 20%, and their numbers came back, much better than expected. What are we looking forward to? Amazon earnings after the bell and Apple earnings after the bell. If Apple comes back strong, if Amazon comes back strong, Facebook already came back strong, Microsoft came back strong, and Google honestly didn't do so bad. If those all come back with good numbers, well, it's going to propel the entire economy up. Now, recession, and how do recessions work? Currently, we're at the second quarter, okay? If we have negative GDP, 1.4% for quarter one, what does that mean? January, February, March. We're already at the end of April, which means that it's quite possible that we had 4 negative months. Now, if May is negative and June is negative, we're going to hear about this around July, which means it's quite possible we are literally at the heart of a recession right now, which means quite possible that right now is the best time to buy stocks. Now you're going to say, Adam, are you freaking crazy? Why would I invest in stocks or crypto during a recession? That is the worst time to invest. Yes and no. If you believe that this recession is going to get prolonged, then we're going to have a recession, there's going to be a stagnation, that might be possibly a great recession, or, possibly a depression, which I don't think we're going to get to, then yes, it's a very bad time to buy because this is going to be prolonged. However, if you believe that we're going to have a short-lived recession of just negative 2 quarters, well, you're actually past the hump, or shall we say past the dip of the recession, right? Because we're already in the 4th month of the recession. So in July, if things come out and say, yeah, we're still in a recession, so we had a negative GDP for another quarter, which means that we had a recession. But then let's say in quarter 3, we no longer have a recession, we came out. Well, you only hear about that in quarter 4, right? So it's delayed. Everything is delayed. At the very least, everything's delayed 1 to 3 months. So the information we're getting now is 1 to 3 months of what happened before. Which means that if you buy right now and you think that the recession is going to be small, only two seasons, only 2 quarters, well, then it's possible that there's going to be a mass migration to the bull side, a mass migration up, possibly, a huge recovery of the entire stock market. And that's what you want to do. You see, if we start recovering, a lot of people can say, oh, I'm only going to buy when I know that the recession is over. I'm only going to buy when I know that everything is back to normal. And to this, I'm going to say that is a strategy, your strategy. However, wouldn't you want to get into something at this point, before this point? Yeah, it might be going here, but wouldn't you want to get in here as opposed to here? Again, you can never time the market. That's a fact. Don't think I'm saying you can time the market. All I'm saying is you have to have a certain strategy. No one strategy is better than the other, but you need to have what strategy works for you. All I'm trying to say is that before people actually realize that you're in a recession, you could actually be in a recession because you're only getting this information after this quarter ends. So quarter 3 is going to give you information for quarter 2, just like in quarter 2, we just got information for quarter 1. With that said, and if you take all of that into account, then right now might be a good time to buy. If you watch my videos, I always say I like companies that have deals. What's a deal? A small to small mid-cap market cap and a 52-week low or near a 52-week low. Why? A 52-week low is not a guarantee that you're going to get back to the 52-week high. But what I like to do is see how much it dropped. If you have a huge drop of over 50%, let's say, for example, well, then in your mind, you're like, okay, well, we can get back halfway until that 52-week high, right, in the midpoint. And that's kind of what's happening right now. There are massive amounts of deals, massive amounts of deals right now to be made. And it's actually like buyer's choice, right? Buyer's pick. Everything is down. Literally everything is down like 50%, 60%, 70%, 80%. Palantir is down like 80%. Teladoc, I think, is over 80%. Zoom, near 80%. Roku, same. Like all these companies are down crazy, which gives you this huge, massive opportunity to buy into companies. Now, I'm not buying into any stay-at-home stocks because I think stay-at-home stocks, honestly, did have a huge burst, and the society is not going to where people thought. People thought that's it. Nobody's going back to the office. Everything is now going to die, and stay-at-home stocks are going to, go insane. But that's not what happened. But there is a clear line in the sand, a clear distinction between stay-at-home stocks, growth stocks, and tech stocks. And tech stocks are not necessarily stay-at-home stocks, where stay-at-home stocks can be a stay-at-home stock primarily and possibly also a growth or tech stock. So it's your job to, differentiate one or the two. I can tell you one thing, Kathy Wood of ARK Invest is having a very, very, very bad day, a very bad week, month, quarter, and pretty much the last year or so is just terrible for her. So then somebody would say, well, Adam, should I buy ARK Invest? And if you don't know what ARK Invest is, it's an ETF, it's exchange-traded fund, equity-traded fund, where you basically have a fund manager, Kathy Wood, who does research, and they trade on your behalf, and you invest in the fund that buys separate stocks for the fund, and she charges like a 0.75% fee. Well, I would not invest into ARK Invest. Why? Most of her stocks right now are losers. And she's like, oh, you have a huge chance to buy in right now because everything's going to skyrocket. The problem is, I don't like her picks, me personally, because all her picks are not necessarily growth stocks, are not necessarily tech stocks, but more importantly, she was riding the coattails of COVID and stay-at-home culture. That stay-at-home culture is not here anymore. Plus, she sold Palantir which means that she doesn't have a 5-year time horizon. She always says, oh, everything is invested for 5 years. Well, that's not happening. She obviously sold. I also think she's playing around with taxes. I honestly think that she sold a lot of her Palantir. She took her paper losses. Now she has realized losses. She can rebuy because she sold like at the end of February, so it's been over a month and 1 day. And then she's going to sell out of one of her other positions to buy into Palantir. That's what I think is going to end up happening. And then she's going to take more paper losses, which is going to become realized losses. And she's just going to try to offset her tax loss harvesting against her gains in the future, possibly. But one thing is for certain, the stock market is terrible. There are tons of deals. The problem is you don't know when it stops bleeding. It could be right now. Like this could be the last day and everything's just going to skyrocket. Maybe. Or this could be like a dead cat bounce. We're going to go lower. Who knows? Guys, none of this is financial advice. All of this is purely for entertainment and educational purposes only. Please let me know down in the comments below. I'm very curious to know, do you believe that we are in a recession or do you not believe that we're in a recession? Do you think this is a dead cow bounce or do you think that we are actually going to start doing a little bit of a recovery? Thank you so much. I hope that Amazon's going to come out with bangers of earnings. I hope Apple is going to come out with bangers of earnings. And I hope that we could do okay. Thank you. Have a great day.